Cool. So everyone, super excited for us this year, starting off and really just having a different focus this year, or a more concentrated focus. We'll be having a lot of these workshops. It's going to be every week, at least 2 to 3 weekly. I think the next one's going to be on the lightning bolt itself, because I want to show you guys how I incorporate what we're learning here along with the lightning bolt, and I'll line it up and you'll see it helps me with my confluence. So it's all about stacking the confluences. But first, I want to talk about today, I want to talk about marking up the charts, right? And we need to understand, well, what is our goal? What are we looking to mark up and why? And what we're looking to do is we're looking to find day trades, not scalps. Earlier on last year, for the majority of the year, we focused on the scalp trading, and that was focused on very, very fast and precise entries, taking partials quickly, often, and then protecting and exiting. And when we did that, one of the major focuses around that area were our zones, right? So if you recall, when I first started off, I would always say, we always want to have zones on a higher time frame. So if you're looking at the 5, we want to look at the 15. If you're looking at the 1, you want to have 5-minute zones. So really the setup was 1 minute zone, 1 minute chart, 5-minute zones, 5-minute chart, 15-minute zones, 15-minute chart, 30-minute zones, 30-minute chart, hour zones. And the reason is because the higher the time frame, the more significant it is, depending on what time frame you're looking at. So the same applies with day trading, except we're looking at higher levels. Okay, so the difference between the scalping and the day trading, one are going to be our zones, right? We're going to be looking at higher zones. Another difference between day trading and the scalping is that when we scalp, we're making decisions on the fly. We're looking at the market, we're trying to read it very quickly, and we're making a decision to buy or sell very quickly. Where now with the day trading, this should alleviate a lot of that pressure. If you were having difficulty scalping, this should alleviate a lot of that, because every section, every entry that we make, it's already pre-planned. We've already identified these areas. We've set our lobster traps, and we're just waiting for price to fall into that trap so that we can then start to respond. So that's going to be the benefit for you if you are moving towards the day trading. We're going to be focused on the day trading, and that's going to be catching that full move. Okay, so for one of the things that I focus on are daily and weekly levels only. I don't chart 4 hours. I don't chart hourly levels either. I chart none of them. The only thing that I focus on are weeklies and dailies. And on the dailies, I'll show you how I chart up the dailies. There's something special that I do at the very end of my markup. And that is what I do is I'll look at and I'll mark up the previous day's open, high, low, close. Okay, and I'll show you that. So I'll have my weeklies and my dailies, which is what you're looking at now. These orange lines are historical dailies. Then I will also plot yesterday's, the previous day's open, high, low, close, because price is going to test that. If you guys followed my trade last Friday, the first TP was 65 pips away, and we hit it. The other one was 112. We hit it. This trade is still live, and it still may hit TP3. And the reason is because I'm looking at the previous open, high, low, close, but we'll get there. So first I want to talk about how I chart my, how I draw, or how I chart up my week every day. All right, so, and I'll run these levels every day. So the first thing I do is, actually, before we go further, is there any questions related to what I just discussed?
So when you said do you just chart the highs and lows every day?
Correct. So what I'll do is I will chart, and we'll go through that. So yes, that's correct. What I'll do is on the dailies, I will look at the daily chart and I will mark my levels. Then I will look at my weeklies. I will chart those levels. And then what I do is I just look at the previous day and I mark open, high, low, close. So say today passes, we had yesterday's open, high, low, close. for me, my cycle is when the day is over, the day is over. I don't follow those rules of if we're, and I'm sure some of you may have, heard this or may have been taught this, which is if the day is closes bullish and we should expect that tomorrow will continue to be bullish if we broke a level of support. That's not a rule that I follow, because there's where you're going to get trapped. What about this here? Like, what about this level here? What about these? If I turn on the daily, actually, and we'll show examples. What about when price turns around? Look here, we have a structure here. It's been red. It's been bearish, right? It broke this structure. It closed bearish. That rule would say we should continue bearish. But what happened? So what happened there? That rule was thrown out the window. I don't follow that rule. Okay, I know some of you may have taken a course. I don't follow that rule. That rule for me is very quickly debunked. So that's this rule here. It broke structure. It reversed. It broke structure. You're thinking, well, you know what? Tomorrow I'm expecting for things to go south, and things didn't. Here, another day. Here is another day where it actually didn't continue. Also, this level I posted up, and this was a level that I posted up like the very next day. So this is not a level that I would have had. I just recently put that up there, right? So you would expect that to happen, and sometimes it does not happen. So people get caught and trapped there. So I'm going to also talk to you about how I look at every single day. When the closing bell rings, I wipe my day. I don't care about yesterday. And I'm looking at something very, very specific, and we'll talk about that. And that's just how we'll talk about how the candle is formed, the daily candle is formed. We know that the daily candle, like every candle, usually has a wick, an opening, a top wick and a bottom wick. So we know that when the day starts, that's where the wick should start to create. Right? Well, when our new day starts, what market is that? That's Asia market. You guys have always heard me say the Asia market is the manipulated market. Why do I say manipulated? Well, because if price is going up, right, in that Asia market, and then come London, it starts to turn around and goes down. Well, for me, that's manipulation. It's manipulated buyers, people into buying that market only for it to turn around. Okay, and it's when it turns around, that's when it's creating that wick. That's what I'm looking for. I'm looking for how Asia market is printing and how London market corrects itself. Okay, and then that's when it's creating the wick then it pushes down into the body. I'm getting in right around the ending of the wick and the beginning of the body, so that I could ride out a whole day, or at least in the majority of a day. Okay, and I'm gonna show you this in its entirety, but these are the things we're going to focus on. For me, that is key, that I'm looking and seeing where's the wick of the day being created, and is it bouncing off of my daily or weekly levels? And for me, that gives me a lot of confidence that I'm picking the right direction, picking the direction that the market's going to move today. That means it's not based on yesterday, it's based on today, right? So we'll cover that, but I'm going to open up a new chart, and we'll start to mark up a chart so that you can see how I mark up. And while I set up, any other questions regarding what we just spoke about? Oh, okay, let's see here. I'll do let's see. I don't know. Let's create a new layout, I guess. We'll call this, I don't have another layout. Okay, let me use one here. Give me 1 second. We'll use this unnamed one. We'll change this to, no, it's 100. I like Awanda pricing. That's what I use. Okay. So what I do is, for one, I set up a layout, as you've seen before in the past, is I set up a layout where I've got 2 charts loaded, right? I've got if I do this, I think I can load it up. I've got, let's load up this one. This is it. I've got two charts loaded, right? I've got the daily and I've got my chart that my main chart that I can drop down to 5 minutes, 15 minutes, 1 hour, and so forth. Okay. I'm always wanting to see what the day is doing. So I want to have that on my screen because I want to increase my odds by trading with the trend. Friday was a counter trend that we called and killed it. And I'll explain to you why I called that trade as well. Okay, so I start out with you can start with a blank chart. Once you mark it up, because it's weekly and dailies, these levels, look at these levels that I have here. Look how far back they go. Look, they go far back. They go back to December 22nd. I haven't had to mark up in so long. You know, these levels are the same levels. If you look at my my trades, every one of the trades, when you look back, if you look at the levels, and the actual trade, the price of the trades, they're visiting the same levels, and I'm just repeating it over and over and over and over again. And then every once in a while, I'll update or nudge my levels. So basically, we'll start with the NAS 100, and what I'll do is I'll start with the weekly levels. And on the weekly, what I'm doing is each one of these candles are weekly candles, right? So what I'm doing is on the weekly, I start to mark up. So let's take a look. Let's start with the last week, right? So the first thing I do is I mark up, and give me a second right here. Let's draw this. Oh no, that's the wrong one. Is this the right one? What are we looking at? Oh, my tools are here. Right, horizontal ray. I click, here's my high. Here's my low. Boom. I label it, and I'll even color code it, as you guys can see. So this is weekly low, weekly high. This is the exercise that I do, right? If I were able to zoom in, you can see that there is a wick on this candle, right? So if there's a wick, since it's so close, I mean, it's only 8 to 10 pips away. Here, this one I could probably make a zone. Let's see, where are my squares? This layout looks so different than the layout that I have. Let's see here. Where are my rectangles here? So I'll draw this out like this, boom. Right? Because it's so close. So I'll just make it a zone. And that'll be a weekly zone. You can annotate these as well. Weekly. Weekly, we'll say high and close. Close, high. Whatever makes sense to you so that you can understand where you're at in price, right? Then I go to the next day, previous day, and I'll do the same. Boom, here's a close. Because on the weekly level, once we drill down, you know, this is going to be, should be significant enough. Here's another level, weekly, we'll say weekly low, right? And then here's another level between here and here. I look to see, well, what's the difference? And what's the difference here? 61 pips. Okay, I want to know about that 61 pips. 61 pips is a you're done for the day, right? So I'm going to here weekly high, right? I'm not going to mark the open. Actually, what I could do is I could actually pull. We know that this is the open and this is the close, so they're the same level, right? Right, and unless there's a gap, so they're the same level, right? Same here. What I'll do is I'll mark this next week. Anything that looks significant, right? I'll mark these levels. This is definitely going to be a significant level here, right? Because that's matching up with this week here. So it's been respected. I look to see, you know, on these levels, what is respected? What levels are actually being respected? Look at this level, like these two open. This is a close to open, so that doesn't matter. That's supposed to happen, right? But I could see that it was respected here and here, right? So this is another level that I'll mark up. Right, here's another level. You can see this level looks great. Look at this. Actually, let me undo that. This level looks great because this is an open close and it was respected here at these lows here. So I'll just drag it back. Right, this is how I'm marking up. I can see that this level was respected. So I'll draw this back here. I'll just pull it back. Right, I continue with this exercise until I get enough zone. You don't have to do the entire chart, but enough zones that I know I can work with for my current week, my new week, right? See anything else looks like it's respect. Look at this open and close here, sort of respecting this. So, and it's in the middle of this long weekly candle. So usually we'll talk about eventually, we'll start to talk about smart money concepts, but a midway point is a area of supply, right? So I'm going to mark this up here. Let's see here. I'm going to mark this level up, boom, right here, right? So these are my weekly levels. Let me see what we have in the chat. We do have a question, I believe. Why can't I see my chat? Let's see here. I'll try to pull that chat up. I'm not sure why I'm not able to pull up. I'm clicking it, but I don't see it. Let's see. Okay, I wish I could stay. Okay, cool. Also, that's fine. It'll be recorded and I'll put it out there for people to share and view. Okay, so that's how I manage my weekly levels. You guys with me? If you're with me, give me a yes. Just let me know that you are. Okay, cool.
Yes.
So this is how I'm marking up my weekly levels, right? Then I drop down to the dailies. And the dailies, now, if you notice the weekly, I sort of just worked back. I just looked at, I marked up the open, high, low, close of each week pretty much, right? So I started with this one, open, high, low, close, I marked them here. I marked it, this is the same, here's the low, here's the close down here that I marked up, right? And then here's the open, and then here one is the close, the open, right? Or here's the low, and then the open here, so I could pull this back, and then the high, which kind of resembles here, so I didn't mark it as too close. And I basically worked I marked each individual candle backwards. Pretty much, that's pretty much what I did, right? So if you follow that, I marked I looked at each week and I said, here's week 1 back, marked open, high, low, close. Week 2 back, mark open, high, low, close. Week 3 back, open, high, low, close, because those ranges are going to be, they should be pretty wide. And if they are, marking those levels that way is fine. But that's different than how you would normally draw support and resistance, right? Because how we normally draw support and resistance is we look for significant levels and we would say, here's a level, because this is a swing high, and here's a level because this is a swing low, right? We're not looking at each daily candle now. Now we're looking at the swing highs and the lows. Do you see that difference? I want to make sure that you understand that difference. If you understand that difference, let me know. If you do not and need me to explain that again, I will absolutely explain that again.
It sounds to me like you, with the weekly, you do the open, high, low, and close, and then with the daily, you're looking for swing highs and swing lows. Is that right?
That's exactly it. That's exactly it. Correct. Thank you. So now what we'll do, we can look and we can say, well, what are significant levels on the dailies that we can mark up, right? And what I'll look and I'll say, hey, this is a significant level. I mean, it seems pretty close here at this level here, because it's a swing high. This is a swing high. It's a double top. There's a swing low. It looks like it kind of respected it in this area. It lines up to what? Our weekly level. This was a weekly level that we had here. So what I'm going to do is I'm going to pull this back, right? Just so that, and I'm going to expand it. Now our zone is a little bit higher, just so that I can capture now the weekly here, which is really, I'm going to nudge it a little bit right there. And then it also touched our daily here, right? We can see our dailies were touched, right? Because when you zoom out, they should be lined up, right? Because, and this is something that you should know, the weekly open, high, low, close, those open, high, low, close levels should be tested and retested numerous times, right? And if we zoom in, you can see that on the daily, it was tested numerous times. It was tested numerous times. Right, so it makes your daily markup easier, but you want to drill in so that you can just see if you have anything else that you feel should be marked up. And I just kind of clean these up a little bit. This one was probably, I'm going to pull this one back here. Actually, this one was here. Actually, I'm going to get rid of this one, because now that I'm looking at the weekly or the dailies, even though these were weekly levels, I'm going to start to clean up. Right, so this one, I will bring in. This one still was a weekly level. I'm going to keep that there. I may even remove that. This here, between here and here, 66 pips. I'll keep that. I'll keep the 66 pips. I'll just line it up properly. From here to here, how much is that? That's another 60 pips. Okay, I'll keep that there as well. So now, as long as I have enough daily and weekly levels above and below me, I'm good. I'm gonna mark this one up too. This one here is actually lined up with the weekly high, and this is a daily low. So I'm gonna zone this one out. Actually, I'm gonna zone this one out. I'm gonna go from here, and I'm gonna include the weekly high that we had, or the weekly here. I'm gonna zone this out here like this. This should have been the weekly high, and this one is really the weekly high. Boom. So I start to zone these out, and I repeat this. Right, and I repeat this. I'm going to mark this one up for sure. And I'm going to do, I'm going to make this one a zone. What's the difference here? This is, in pips, this is 110 pips. Okay, so of course it's 110 pips. I'm going to mark each one separately. Boom. Boom. Okay. So that would be all I need for this week, right? If we were starting up, I'm going to continue to use the markups that we have that I'm sharing with everyone. But this is how I would mark up my chart for day trading, holding for the day, my weekly and my daily. I don't care about the H4. I don't care about the H1. That's just added noise, right? Because if you're dealing with and this applies to any instrument, and if you're dealing with an instrument that's noisy, I know some people have been working with US 30, and maybe they're getting knocked out, maybe because it's too volatile. And if you're marking up daily and H4 levels, you're going to have too many, and you'll be getting in probably not at the best level. If you're getting in at the daily and the weekly, those are going to be your better levels for entry. Is that cool, everyone?
No, it makes sense.
Okay. So now that I've got this going on, right? So this is today. Now that I've got this going on, right? I didn't even mark up any new lines except these here. So I'll color code this so that we know what we're dealing with, right? So I'll just change this color. I'll call this daily, right? This is a daily level, sort of a daily and weekly, but because it includes the daily, I'm going to change its color, right? I'm going to see the background. I'm going to make it like a nice blue. Whatever works for me, I'll go with this one. Yeah, blue, right? And this one here, included a daily. I'm going to mark this up, daily. I'm going to say daily. And I'm going to change the color here, blue as well, just so I can differentiate, right? I want to know where I'm at, because if it's hitting a daily level as opposed to a weekly level, well, you know, I would think that the weekly levels are going to have more weight. Okay. So if they're going to have more weight, I want to be able to know which one am I bouncing off of, which one is going to give me the higher probability. I think weeklies will more than dailies. So once I mark up, all I do, next thing, this is something key, and this is something I want to talk about. So we talked about charting up the weekly and the daily, right? But not necessarily complete. So I'm going to do that now. What I do also is I mark up, I mentioned, the previous day's open, high, low, close. So the same way we mark up the weekly is going to be the same way we mark up the previous day only the previous day. That's it, right? So I'll mark up the previous day. Here's the open. I'm going to set a different color just so that we can see the differences. I'll call it green. I don't know, we'll make it a green just for this example, right? We'll drop this here. We'll drop this here, right? And since this is already in the zone, I don't need to mark the high here, but I will anyway. And the reason for this is because I'm waiting. I do not make entry, and this is a discipline that you have to learn and adapt to, and that's going to be with your experience, is you need to wait for price to fall and retest any of these lines, the areas that we've predefined, because any area that we predefined, we're thinking is a significant target. Okay, so if it's not a target you want to trade against, remove the line. Okay, for me, if price hits any of these levels, I'm looking for entries. So the reason why I marked up the previous day is because today, or on a normal day, today's a holiday, but on a normal day, price is going to retest these levels. So even though I have my daily here, my weekly down here, and say by the time I look at the charts, the price is down here. To say the chart is, say if I'm looking at the price, if I'm looking at the charts, and by the time I look at the charts, price is already down here, right? Price has moved down here, right? Price has moved down here. If you're not, if I didn't have these green lines, I don't have an entry. I missed my entry, right? Price could be down here, right? It could have done this, right? It could have done this, and then it moved back up. Say move back up here, boom, right? And then it shows signs of weakening, right here. And now we're looking to go down. I wouldn't have an entry if I'm just looking at my weekly and my dailies, right? My multiple dailies. So this gives me an opportunity to find entry at these levels, also at the previous day's levels, because they're going to be tested. And if you don't believe me, I'm going to show you this now. I'll look at Friday, right? So if we look at Friday, let me clear this out. If we look at Friday, this was Friday, right? I'm going to hide these levels, right? If you look at Friday, let me hide my concepts here. These are things that you can add on. I'll share these with, well, you have them. If you're looking at my zones, you have them, right? So look at, this is the previous high. These lines are previous high, low, close, but I'm going to draw it out for you so that you can really see it. Let's see here, engulfings. I will hide that for now. I will hide this for now. And one more, I think, this indicator. Cool. So now if I go to the daily, and I mark up yesterday's chart. Yesterday, this is Friday, so I'm going to mark this level here. I think it's going to add everything. The minute I try to add one, it's going to make all my other lines visible, I believe. Yeah, so it makes them visible. So let me just use this indicator and I'll just draw them out. So let me hide this. So I really want you to see this clearly. Here is a previous open, high, low, close indicator that I use. I draw this out, right? And if I bounce down to the, say the 15-minute, right? So this was Friday, and this is the previous PDH, which is the previous high, PDL, which is the previous low, right? Where's the previous open and close? Do I have it? I may not have the indicator marking as open and close. Let's see here. High, low. I want to mark the the open, high, low, close. That's what I want to show. Right? So these gray lines, do you see these gray lines? I'm going to make it even bolder. Right? Open color. We're going to make this a, I don't know, a yellow. No opacity. I don't want it to be opaque at all. Yellow. Take a look at this. Right? And these are your high and yellows, right? We'll make this bright also, so that you can see it. Right? So these lines here are previous days, open, high, low, close. Do you see how it's played in the middle here? Even though I have, when I mark up my weeklies, I'm going to show you my weeklies, but look how well it's respected the previous day's open and the previous day's close. The body of the candle, it respected it. So this will give you opportunities to enter again. So it's almost like we're scalping, but we're scalping the daily candle, if you will. So do you see any questions there? Do you see why I mark up the daily, the previous daily's open, high, low, close? That's a good example as to why why you should mark it up. Here's another day where it respected it nicely. Look at this. These lines are the previous days. They're the previous days open, high, low, close. Look, it came in, you couldn't find entry, say you missed it, but guess what? It showed rejection here and you had an entry there. It's bouncing off your opens. You probably don't have a weekly level here or daily. And if you don't, it gave you opportunity to find entry again. Do you see that? Does anyone see it? Anyone? See it?
Yeah.
Yeah.
Okay, great. So that's something that you're going to have to learn to train your eye on, right? But I'm always conscious of previous days, open, high, low, close. That's the only thing I care about. That's the only thing I care about. So that's why I mark it. So what we've covered here in detail right now is simply how we mark up the chart. We didn't talk about entry and why we talk and when we enter or why we enter and so forth. We didn't talk about that in detail. We just talked about how we mark up the chart. Right, so take a look. This is without my levels. Look at this middle line, this previous daily open, this previous daily close. Take a look at this. I'm going to show you my lines. You're going to see there is no line here, right? The markups that I have didn't include this level. And because it didn't include this level, I missed this drop. If you guys recall, yeah, Friday, I was asking, did anyone take that drop? Did anyone take that entry? I wanted to understand how someone could have taken the entry because I didn't catch that entry because I didn't have this level marked up. Look, this level, this was the entry that we took and we wrote it all the way up, all the way. You're going to see when I post this, there's going to be a line here. There should be a line here. But this level here at this drop, I missed this entire drop because I didn't have that open marked. You see that? So we have the level for the low. That's when we wrote it up. But this line here, I didn't have marked up. I did not have this previous day daily close marked. And that gave me no confluence to enter, right? So this is the divider for the day. The new day came. I was hoping that it would touch one of these levels. It touched this level. This is a level it touched, right? But it did not. This was during Asia. I want to talk to you about Asia. I don't trade Asia. Even though it touched my level, I don't trade Asia because once again, I told you it's a manipulated market, right? So I don't touch Asia. So I wasn't even interested in Asia at the time. But if I hide my previous day open, low, close, this is what I saw. So when price started to drop, I had no confluence of entry because I did not have the previous day's open, high, low, close marked. If I did have previous days open, high, low, close marked, it would have been clear that this was the area for re-entry or for an entry for the full drop. But I stayed disciplined in my plan. I didn't see engulfings. Well, for one, I didn't care if I saw engulfings here because if it wasn't at my level, I'm not making entry. Here, even though it touched my level, it pushed straight through. It didn't give me any engulfing anything. So I had to just sit and let it drop, and I did not participate in that entire down move. So that's going to be key for you because if you have these levels, this is the difference with the day trading and the scalping. Scalping, we would have been trying to figure this out. Get in. We would have had lower zones. We would have had a 15-minute zone, a 30-minute zone to look at, and maybe it would have given us some signal there. But with the daily, because we are day trading this, that means that we have predetermined what areas of interest we want to look at. It didn't touch an area of interest here. There's nothing here that was of interest to us because we don't have one of our markups. So because we don't have one of our markups, we don't care if we miss the full move. We do not care. That's going to be your discipline, is that you have to follow your rule. And your rule is going to be, what's 536? Your rule is going to be that price has to reject, or it has to touch or fall into an area that you've already targeted, that you've targeted previously in your markups. This wasn't that. This just shot down and there was nothing for me to do. I didn't even care. I didn't even care, but I wanted to understand why I missed it. And when I really dug in, I then plotted the previous day's open, high, low, close, and I realized, hey, I missed that opportunity because it was at this level, and this should have been an area of interest to me.
The one thing I was wondering, so, it hits your zones. Are you looking for it to reject off the zones? And if it doesn't reject, you don't take the trade, or do you take the other side of it?
Good, very, very good question. Yes. So I'm looking because there are times when you're going to get it, it's going to be a continuation. Most of the time we're looking, if it's I'm looking for the double tops and the double bottoms, right? So if I'm getting those double tops or double bottoms, I'm looking for the reversal. Right? Does that make sense? So I'm looking for the reversal on the double top and the double bottom. So if price is doing this, say, price came up, from here. Oops. Let me annotate. Right? If price came up here, this is top one, right? It came down, right? It came down. If at this point it came back up to this level, I am looking for a double top and I'm looking to take it down. Naturally, I'm looking for that. Of course, price could come and continue. Look, it did it here. It came down. And then this was an ugly double, formation of a double top or an M formation, but price did come up here. And then now I would be looking, I would say, hey, this is a double top. Is this the ending of my trade? And I would start to look for the engulfing candles, bearish engulfing candles, or a evening star, or even a 3 white knights. I like the 3 white knights, the 3 white knights, or the 3 black crows also. So that would be 3 bullish candles followed by 1 good, strong bearish candle. And then I would look for entry. It didn't give me that. So there's nothing for me to do. I was in this trade here from down here. We were riding it up. I didn't have to take a partial or do anything because I didn't see any confluence that would show me that it's going to start to turn around. So yes, the answer to your question is, I'm looking to see what the market is going to tell me to do at those levels. But the first step is price has got to be at that level.
Okay.
Right. And that's the key. That's the key. And that's why my workflow, we could talk about the workflow. My workflow, I'm working off of alerts. I don't care. And this is another discussion. We'll talk about this also. And we'll break this up into individual sessions. This is a lot, but I want to give you an overview of how I mark my days and how I, the framework that I use. So for one, it's alerts. For me, I am setting alerts at these levels. You can all set your own alerts. I'm setting my alerts and you're getting those alerts in the Discord, right? So I'm looking at the Discord where I'm muting if I'm not in a trade, I'm muting all of those channels except for the 1 hour, speaking of alerts, the 1 hour alert.
So you only have the 1 hour. It's not like the daily, weekly level.
Yeah, I'll look out my alerts. I will set the daily and the weeklies. I'm sorry. To be clear, I'm looking at the Discord group. If you've looked at our Discord, there is many different alert channels, and I'm only looking at, if I'm not in a trade, the hourly. I'm not looking at I'm muting the double tops, the double bottoms, the 5 minutes. I'm muting all of those low time frames because first thing I need for price to do is fall into an area of interest for me. Right? So I'm using an alert. I don't need to hang around the charts and wait for, the setup. I'm using that alert. You can do that also on your chart. If you have, levels that you have, just go in and you can click on, here's an alert, and you can just click on alert and set your alert for that line. For any one of these lines, you can set an alert. Set your alert. So you're not waiting around and staring at the charts all day. When I was in South Africa for the last 5 weeks, it was freaking awesome because I literally was not sitting at the charts. I was literally working off of alerts. The alert notified me when to pay attention. If I did not get an alert, I did not pay attention. It was simple as that. And I would come and I would look, I got an alert. Oh, price touched my level. Great, it crossed my line. Now I'm focused, and then I'll unmute my double tops, my double bottom alerts, and my 5-minute alerts, because now I want to zoom in now. Now I want to zoom in and I want to get all those notifications to let me know what is price doing. That's how I'm doing it. And the difference is, many of us, when we were scalping, we would wait for New York session. and we would trade New York session. And now that we have, the reason why it worked when we were trading New York session is because we were scalping. I can jump into the market. We were able to jump into the market and scalp anything at any time. But now that prices got to be at any one of our levels, how can you time price touching your level at 6:30 in market open? You can't. So you have to, right? I mean, we're in agreement that at 6:30 when market opens does not mean prices at our level. Price could have been pushing since London, and now we're in the middle of two levels, of two weekly levels, and we've missed all of the move, and we have no opportunity to trade at 6:30 when market opens, my 6:30 Pacific time, when New York market opens. Do you follow that? Does everyone follow that? I just want to make sure that's clear too, because I have learned to not rely on the opening bell to start my trading day. Okay. I have not bound myself to just the 5:30, 6:30 time, but the hour before market open and market open to trade, because you're going to miss a lot of the move. I'm going to show you that. You're going to miss a lot of the move. I'm just disciplined enough, and it comes down to discipline. I'm disciplined enough that if I'm getting my alerts, I'm looking. I'm actually looking. I'm looking. If it's at 2 a.m., I'm going to look. I got my phone. I'm going to look and see, is it worth it for me to get out the bed? And I'm looking. The alerts aren't going to go off often if you mute the minor ones and you have the 1 hours that are alerting. That is, for me, key. So many times I'm in a trade London, and I want to talk about that and my strategy for entry, because I know that a lot of you guys are having issues with entry. Even with what you've learned, there's some basic rules around that you're going to miss a lot of them. I just don't see how you're getting into these moves in New York and riding it for the entire day. Last week we were lucky. This actually was after New York, after the major push, but this was a major push we could have caught, and we could have slept through the morning bell. We didn't even have to play this move. We could have just taken this move if we were alerted, and we could have slept through our morning away, or not even looked at the charts and focused on the other tasks that we have for our day, right? So there were two moves Friday. We were lucky that this happened at 6:30. It happened right around 6:30. You can take a look right here, 6:30 at the bottom. This is when the move started to begin, and we got in right around that time. We were in actually earlier. I dropped the signal like around 5:45, even earlier, before the market opened. How ballsy was that I was calling a signal before market volume came in, and it just went. But for me, I want to be aware of what the market's doing, and I want to be available to the market when it presents opportunity. So I'm not just bound to my 6:30 New York market open bell. You can still do that. You're going to get those levels tested, but many times what's going to happen on days unlike Friday is that you're going to get in, and because the market has already moved, you're going to be scalping. You're going to be forced to scalp that move. You're going to be forced to take a partial and close that position, because during that day, price is going to retrace and it's going to then continue in your direction, but you've scalped it. And you're not holding for a long duration. Does that concept make sense to everyone?
Yes, sir.
Yes.
And if not, please, because we're going to do this so many. Josh, I see your message. Will Discord be available to join? Yeah, the link is in the Telegram group. I'll drop it again. Right now it's free and open, right? Because my guy didn't create the security on it yet that I need to have. So right now those alerts are free. Anybody could join. They need to understand how to trade it. They're not in this community where they're getting this education, but anyone can join right now, and I'm leaving it open for anyone to join if they want to. They can join. Eventually, they're going to be knocked out, and then we'll have to subscribe. But you guys are going to have it because you're subscribed. So then you'll have it, and only us will have it. Only we will have it. But if you don't understand it, that's great. We're going to talk about this every freaking week, and I'm thinking every Sunday will be our day to go over these things, you know, and then of course we'll have another charting session Wednesday, and then I'll have something in the middle of the week as well. But for me, there were, you know, when people say, hey, I'm in, and if they're using this, a strategy of weekly and daily levels, I'm usually, you know, ending of the year, last year, I'm texting them like, how could you have gotten in this? Did you get in this? And if you did, the only way you were able to get in this move was if you were in London. There's no way, you know, that you could have gotten in, right? So I've changed my workflow where my workflow doesn't start at 6:30. It can, but it can also start a little bit earlier. And now I want to talk about, I want to pause and I want to ask, does anyone have any questions about anything, even if it's from the very beginning? We can go over that. And then I want to talk about entries, what I'm looking for entries once I get my alerts. Right.
I had one question.
Sure.
When you're marking the previous day's levels, let's say we're like Wednesday, are we keeping our like Monday level, for example, or are we like erasing those and just doing Tuesdays?
That's exactly. So I only go back one previous day, and then I clear my board, except for my, you know, the major levels that we just marked up, and then I'll mark the previous day. I'm only carrying over the previous day.
Okay.
Yes. So you'll only have, other than your dailies that we have marked up, because we do have all these daily lines here that we, you know, that you'll have the dailies, your dailies. Other than your dailies, I am only marking up the previous day's open, high, low, close.
Okay.
Because the daily markups that we're marking are the swing highs and swing lows.
Okay.
Right. So I mark up, and I'll write it out here. I mark up, markups are going to be, let's do this here. We'll say markup. Right. And let's change this font size. I'm going to write this out. Let's see here. Oh, here it is. I was looking for the wrong one. Right, markups. Right, so I mark up. Right, I mark up daily, weekly levels, weekly, open, high, low, close for each candle. Right, I'm not marking swing highs and swing lows. And then dailies, swing high, swing low. Right, that is, let me just do this. That's how I'm marking up my chart. And then I'm doing previous daily, open, high, low, close. That's how I mark up 3 different levels.
I thought you marked up more than just the swing high, swing low on the daily.
I'm sorry, say again.
I thought you, like just now in your thing, I thought you marked up more than just the swing high, swing low on the daily. I thought you did like where there was, I guess, more, what is it, consolidation?
Yeah, so they were the swing highs and swing lows on the daily.
Okay.
Yeah, they were. And I just nudged. So some of them lined up with the weekly, and I just nudged. I'd create a little zone around it just so that I could include the daily and the weeklies. That was this.
Are you doing that on the wick?
Yeah, so I'll do wick to body.
Okay.
Right. So if I'm doing the dailies, I'm looking at the wicks, the actual swing high for the highest price and the swing low for the lowest price. But if I see that level is super close to another level that I've marked, then that's when I create a zone.
Okay, cool.
Yeah. So let's see if I can show you this.
How many points or pips like would you consider close? Like no more than 30, 20, 40?
I'm good with 50, 60. You know, I want, you know, 100, but I would say no less than, for me, I think no less than 60 pips. And the reason why is because I'm not going to catch the whole move. So I want to catch something that's significant enough. So if the zone, so for example, here, this one here from here to here, this was 79 pips. So I'm good with that. I'm okay with 79 pips, or 82 pips. I want to know when price has an opportunity to move 80 pips. I want to know that. If it's something smaller, like this zoned out, this was actually originated from a high, a weekly high. This was the high. And then also I looked at this level and saw this. I zoned this out. This is only 40 to 50 pips. So I created it as a zone. I kind of joined them together. And if it's in this area, I'm not trading from the bottom of this zone to the top of the zone. That's like a dead area to me. But I want to know that price has entered it, and I want to know that it can go that high, and then I'm expecting for a reversal. If it's at a significant level and it's at a double, it's giving me double tops, then I'm expecting to make entries. But if it's in a zoned area that I created, I'm not trading it from the bottom of that zone to the top of the zone. I know that price can land anywhere within this zone and turn around. It can go to the bottom and turn around. It could go somewhere in the middle and turn around. It could go a little bit higher and turn around, but I'm not trading this from this line to that line, as I would from, say, this line down to this line. I would trade that. I would trade this line all the way down. I would trade a break here, if it gave me a sign, all the way down to the next line. I think that's significant. I mean, this is a significant move. Yeah, 200 and some odd pips. I would be trading it from zone to zone, from level to level, from level to level, level to level. But if it's zoned out, it's just, when it's zoned out, it just means to me that the zones are too close, or there's so many swing highs, for example, that are in the zone not yet lined up, but they can range from here to there. And I just want to mark that out so that I'm not getting in too early or too low. This is a warning to me to let me know, hey, if it's rejecting here, don't be so hasty to get into a trade, because it can continue to go up even a little, deeper into the swing. And then I would look for turnarounds. Does that make sense?
Yep.
Okay.
Thank you.
So
Quick question, Squawk. So when you have it typed out weekly open, high, low, close for each candle, how many candles are we talking about? I guess I just thought it was the previous week.
so no, it's not just the previous week. I go back to where at least there's no given number. I go back to at least where I've got enough zones below me and enough zones above me. Current price. Right, so I looked at this candle here. This is our beginning candle, our candle for today. So I had to mark previous days, but I had no zones above me. So I had to go back until I got zones that were above price.
Okay, that makes sense.
Yeah, so I want to have at least 2 or 3 zones above me, 2 or 3 zones below me.
Got it. Okay, thanks.
Right. Yeah. So if you go any further than that, that's cool. You can do that. That's fine. It's just you're eliminating yourself from having to mark up later, because you're going to have to, when price drops, or if price pushed up, if you didn't mark, many of these zones above this, you see, I've got zones all the way up here. If you've got many of these, if you don't have these zones, you'll just mark them up once price starts to get into that area. So I'm just saving work by going back a little bit further here. Look at these. I've got more than enough zones below me. But if I just had 1, 2, maybe down to here, these 3 zones, that should be enough.
Okay, that's a lot more clear. Thanks.
Yeah, no worries. So for me, when I'm seeing this here and I'm seeing all these gaps, that's letting me know when price comes up here, when price starts to push up into these areas, we've got a lot of runway between the 300 pips. We've got a lot of runway between 100 pips from here up. We've got a lot of runway between zones, which means that's going to be a lot of opportunity, that 500 pips, that's going to be a lot of opportunity for us to gather up these pips, right? Because that's what it means. The bigger the gap within the zones, the bigger the range that price has got to move. And if we've identified these as weekly and dailies, and we accept that weekly and dailies are respected and price will always return to those levels, then we know that we've got a lot of runway in between. When you're looking at this here, this level here, these levels here down below on the daily, these are weekly levels, but they're so tight, we've got to be careful, because price could shoot through one level and go down to the lower level. I could have zoned this out if I wanted to. The same principle that I used here, I could have zoned this out just to give me a warning that, hey, don't be so, this area includes many zones, so price could return back to any level within that blue zone. That's why I block it out. If it's a nice clean zone like this, there's nothing to zone out here. I'm not going to have a zone from the body to the wick and have a big wide zone. No, this is here is good enough for me. But when I get a lot of price action here that is all in between, I would really want to pay attention and zone it out. I personally think I can navigate this, so I'm going to leave these as separate levels and not zone it out. Okay, so it's 6 o'clock. So let's talk about how I then identify entry, because we didn't identify entry yet. We just identified areas that we're interested in. We did not identify how we enter. Okay, and how I enter is slightly different than what you may have learned. Or I don't even know if you've gathered entry or if you've got support on entries or anything like that. That may be a challenge, so anyway, I'll show you how I enter. What I do is I'm looking at a wick. If we study what a wick, what a candlestick is, we know a candle has an open, high, low, close, right? We mark them out. We know that candles have open, high, low, close, right? So I'm going to go to the daily. These are dailies. We know that the candle has open, high, low, close. So I'm going to draw one out, right? So a candle is going to have a body, right? In no particular area, no particular reason why I'm putting it here, but it's going to have a body. It's also going to have a wick, right? It's also going to have a wick. I'll just draw it this way. It's also going to have a wick on the bottom and a wick on the top. We know that the majority of candles are going to have top and bottom wicks. So let's talk about just daily candle. What creates the wick? Well, if we're talking about this is the open price, right? Say this is open here. Say this were open price here, right? This is open price, right? And I'm going to mark this. I'm going to say this is open, right? Open price, right? Right? And this is close price, right? And this is stuff you guys know, but you're going to put it together and it's going to start to make sense and why you can use this as a tool, right? So if this is open price and this is close price, what does that mean? That means that we had to have had a candle that closed here on a previous day, right? So there's another candle that may have looked like this. I don't know. But we know if this is open price, that means that that same price level is close price from the previous day. Are we in agreement?
Yes.
Right? I'm going to color this red so we can make sure we get red. Price move down. If this is open price and this is close, this is a bearish candle. And if this is open price and this is close, we know that's a bullish candle, right? This is open price, right? And we know the top one is going to be close. Right? So if we have an open price and a close price, what makes the wick? What is making the wick? Does anyone know?
Just the daily movement. I mean,
That's
the
right.
swing out, swing low, daily movement.
Exactly. A swing high and swing low daily movement. Absolutely. Now, that swing high, we know there's a basic rule in trading that we know before we can make lows, we make new lows, we got to make new highs. So before we make new highs, we've got to make new lows, right? So we've got to push up to push down. We've got to push down to push up. That, if you're looking at it not as a swing high and swing low over multiple candles, but you're looking at a candle that is creating the wick. a push up, a swing high to create lows. Look at this candle we just drew out. It had to create new highs before it could create new lows, right? So this candle, this wick is created, usually the wick is created in the beginning of the candle, right? Sometimes you're going to get it where price is going to form, you're going to get a body, right? You're going to get a body and it's going to do this and it's going to just drop. Drop, drop, drop. It could drop all London sessions, say, with no wick, and then come New York, that thing wicks up, shoots up, and if it shoots up, your candle is a wide candle. I'm going to even do it with, I'm going to do it with Zoom so I could draw it better. So the width with a body can look like this, right? It's going to do this. It's going to push down, right? And then come New York session, say price pushes back up. Right, so this is candle one, push down. I'm going to draw candle two. Say price pushes back up. If price pushes back up, you're getting a bottom wick, right? It looks like this. And then if price made new highs, then price looks like this, right? That's how the candle's formed. It shot down. It had to create a new low to create a new high, right? And then if it shot up, and on the third iteration, if it shot up here and then turned around, well, then your candle looks like this, right? And then it may look something like this, right? Because price then, in the, you know, this, we're talking about stages of the same candle. It's the same candle, but it's how the candle is being formed over time, right? So the wick usually is created in the beginning of the candle period. So if it's a 5-minute candle, you're probably going to start to create wick in the first minute of the, or first few minutes of the 5-minute candle, first few minutes of the hour candle, first few minutes of the, or first few hours of the day. So I then connect that to my sessions. Well, if a new candle starts after market closes, after New York session closes, that means that the new day begins when? Asia market, right? We know this, don't we? We know that the new day begins Asia market. Asia market has the least amount of volume traded. That's going to give you the manipulation. That's going to give you movements in a direction that chances are may be corrected in London market or New York market when all the volume comes in. You follow me? Do you follow that, everyone?
Yes.
Yes.
Okay,
Yeah.
this is for me, this is super key. So what I'm doing is, that means that if I want to trade this entire day, right, I need to get the best way to do it is, if you can find opportunity where you could get in here, you know, somewhere at the beginning of the body. And if price is going down, you ride it all the way down. But when the new day starts, even though that's the beginning of the body, you don't know how far the wick's going to be, how tall the wick's going to be. So you have to wait for the wick to be formed. The wick is going to be formed in Asia market. This is how I enter every day. Every day, this is what I do when I'm day trading. I'm looking at Asia market. I'm considering and I'm accepting in my head Asia market for the instruments we're trading is a manipulated market. I'm not talking about GJ or anything like that. That may be a different strategy. But for US 30, NAS 100, London, Asia market is the manipulated market. That is the moment where price is going to, where the daily wick is going to be formed. And I'll prove it to you. I'll prove this to you, right? I will prove this to you. Let's go to, is this my, no, these are my, this is mine. Yeah, I'll prove it to you. Right? So we have the dailies. Let's take a look here. We have the daily, right? This is a daily. We know that this is a daily from this line to this line. This is a daily, this is a 15-minute chart on the daily. I'll even put it to the hour, right? So on the hour, let's find that day. Here it is. Here's the day from this line to this line. Let's see if I could expand it without losing it. Let's take a look, right? The day started what? At here it says 1500, right? The day started Asia market. How many hours is Asia market? Well, from Asia market to London, that's 8 hours, right? So I look at 1400, right? Oh no, 12, 13, 14, 1600, 4 o'clock, right? Because market closes at 1, then I have the 2, 3, so say 4 o'clock. We know that my midnight, my Pacific time, London market opens. So from 4 to 8 is 4, 5, 6, 7, 8, 9. I'm sorry, not to 8 to midnight. 4, 5, 6, 7, 8, 9, 10, 11, 12. That's 8 hours, guys. That's 8 hours of Asia market. I want you to run this exercise and look, if you calculate the next 8 hours of the day, price pushed down. And look, just look at the time slot here. This is at 0, here, 0, 0, 0, 0. That if you see the time at the bottom, that's when London market started. So Asia market pushed down. Here's the open. Asia market pushed down for 8 hours and London market started to correct it. When London market got to this level here, got back up to open, what do you think we had? A wick. We had the wick, right? So when let's follow this with me. When London opened, when Asia market opened up and pushed down, all we had was body. I'm going to draw a wide body. All we had was body. We had a body that looked like this, with a top wick that was very small, and the top wick looked like this, right? Because it lined up with this high here. Are you tracking with me, everyone? Are you tracking?
Yes.
All right. So I'm just drawing how this is the combination of all these 8 hours that from the open to London, from Asia market open to Asia market close, it pushed down. Right, and this is what the candle would have looked like then. Then what happened is London market started to turn around, and when London market turned around, the candle formation changed. It went from body to wick. This was then the wick, right? This was then the wick, right? To body. The candle formation changed and it looked like this for the rest of the day. Are you following me there?
So
So
I
is
have
that
a
what people
question.
call, like, wick fills?
Say again.
Is that what people call wick fills?
That's right. Well, wick fill is a different kind of setup.
Okay.
Because a wick fill could be, this is a wick fill. Yeah. So this would be a wick fill, right? So you've got a, here, say the candle didn't have that big wick here and it had more body on the below, and you have this red candle. Say this were green. If this were green, a green candle with a top wick like that, and it closed bullish, then you would expect that price would wick fill it.
Okay.
Yeah. So that's a different kind of candle structure. It's a, in this example would be a bullish candle with a very high top wick. So bears came in, pushed it down, but didn't flip the candle to green. So because it closed bullish, I mean, it did flip the candle to red. So if it closed bullish here with a very, very long wick, you would expect that price would fill that wick and push back up. And that would be a wick fill.
Okay.
But the formation of this day is giving you it's looking like this. It's really looking like this, right? I'm just going to do this and just make it look more like a candle. It looks more like this, right? So if you can identify this and and you can accept, and this is a smart money concept, it's the smart money concept is that Asia market is a manipulated market. So if that's the case, because they're accumulating positions, they're pushing people into positions and giving them an idea. And I see it all the time. They're getting trapped. They're pushing price down. People are buying, and then they immediately push price up hard, quickly. They trap them. They're trapped, right? So if you can identify this, that Asia market is manipulated, and if you can accept that, and if this were to line up where we had a level, say Asia market touched a previous level. I'm going to draw a level here, right? And I'm going to just make this a funky color so I know to delete it when I'm done, right? So I'll make it this level here, right? And say this is the level. If price came down in Asia market and touched our level and started to reject and created then the wick, the London market started to create the wick of the body, this would be great entry. This would be a great opportunity to identify entry. So for me, step one is price has got to return to one of my weekly levels. So price here in Asia market return to one of my weekly levels. 2, the market has got to show me signs of the reversal of Asia. And here's the reversal of Asia. 3, then I've got to be able to see that somewhere between the time that price touched my level, that I'm starting to see engulfing candles or morning stars and such. Then I can make entry, and I'll make entry up here. Because I'm confident that if London with all that volume that's coming into the market, they've already made that decision that price is moving up. So look at what happened Friday. Look at what happened Friday. This is Friday, right? Look at what happened. We had, this is Friday, right? Yeah, so Friday. We had all the way up to here. Asia market came, shot down. That was all bearish body. In Asia at 1900, that's 7 o'clock, it pushed back up. It bounced off of my level. I don't care that it bounced off my level because I don't trade Asia market. Come London, you can see the time at the bottom. Now we have a wick, but we didn't get body. We didn't see anything pushing up. So I wasn't interested. I missed this whole move down, right? Because I didn't have this marked out, this previous open, high, low, close, right? Come New York, this is 5 o'clock. It touched my level again. Come 5:30 and 6 o'clock, it was starting to bounce off this level. And that's when I made the decision that New York market, the volume of New York market is going to correct Asia market and also London. And that's when I got in this trade. Because I know, because think about it, at this point, there was no wick. There was no top wick. From here all the way down to, like I said, Asia market is manipulated. And now you've got to identify when is it turning around. Well, it's not going to turn around exactly at midnight. It may not even turn around at the beginning of the new 4-hour candle, which is 2 a.m. my time, right? London may continue in the direction of Asia, but if the day doesn't have a wick, I know, and I'm feeling very confident that price has got to turn around and print a wick on the daily candle. It must. Well, I don't want to say it must, but that's what I look for. If the day doesn't, and say for some reason we've got an open price with no real good top wick, and price pushes down, then guess what? I'm not trading that day. You need to see that there was no wick, and then price is turning around at a level that I've identified in a major market, London or New York. And once it starts to do that, I'm feeling confident that price is going to move up. And that's why I felt confident taking this trade, because there was no top wick for the day yet. And I'm thinking, how the hell are we going to have an entire day pushed down so deeply without a wick on the daily? That is rare. Look at this one here. This is a 1 hour. So on the daily, these are 1 hours. So there was no top wick. So if I look at the daily, I wish I could do it. I can't rewind it and show a daily print. I'd have to show hourlies. But here you could just see this is the open. The wick was 9 pips. The wick was not, it pushed up 9 pips and then dropped 125. I didn't buy into the fact that we're only going to have a 9 pip wick. So that led me to believe that this 100 and some odd pips was going to be the wick. And when price once again dropped here, I dropped down to my 5-minute and my 15, and I was starting to see engulfing candles. Right? If I turn on my engulfing indicator, This is all easy, guys. These are the indicators, engulfing candle indicator. I just found it and said, and looked to see if it was good. Look, I got starting to get these engulfings. Boom, boom. I'm seeing that price is pushing over my level. And then I got another major engulfing here. We got in at 340 or something like that. But I called it here because I started to see that price was pushing up. I think it may have been a morning star. Let's see here. May have been a morning star. Here, no, it wasn't quite a morning star, but maybe this one, maybe this candle formation, just seeing that how this was pushing up is when I made the call that, hey, this was a strong candle, and I made the call for the signal. It was like, I think it was like 11,340 is when we entered, or 344, one of those two, which is right up here, right here. And I made that entry. Price started to stagnate. It started to slow down, and it started to accumulate here, consolidate. I'm sorry, it started to consolidate. It didn't make any major, it didn't look like it was making any more move. And as it started to approach New York, where I knew a lot of volume was coming in, I took that, I used that as an opportunity for entry. And also I received a LB printed on my other screen at this level. That was all the confluence I needed. It's bouncing off of my level, or my zone, my level. It gave me 2 printed engulfings. It then gave me an LB. I didn't have a top wick. Asia market was not yet corrected to give me a wick. And that's why I took that trade. And you can practice this. You can go back to days and you'll see the best days for you to have made entry are when Asia market made a wick. Asia market made a wick for a move, right? So I don't have levels here, right? There are no levels here. Let's see what's in the chat. What time frame did it give you an LB on the 5 minute? Yes, the 5 minute, correct. Yep, Christian was on the 5 minute. And Josh, I see your message about issues with the LB and setting up. We're going to get on an LB. I may even run that tomorrow in New York, a session where we'll go through the LB and we'll record it and we'll do exactly what we're doing today for everyone that needs to join. If evenings are better for everyone at the time that we started, let me know. I know it's a weekday, tomorrow's a holiday, but on weekdays, if it's better in the evening, give me those timeframes because I know we're in different time zones. Give me those timeframes and I'll just work around that. But if we look at Asia markets and see where it's best, take a look here. This is an Asia market here, 1500 to midnight. It didn't quite move and do anything. It shot up. It shot up here, so that means that it gave me a wick of, let's see here, from here to here, 53 pips. That's pretty significant. 53 pips. It started to move up. This may have been a move. I don't believe I took this move. This was at 1 o'clock. I don't believe I took this move. I'd have to look and see why I didn't take this move. It could have been because I felt that this was a zone. Because I marked this zone up. This is the charts that, these are my charts. We marked up this chart just so that everyone's aware. This is my chart. This zone here was too close. I probably didn't take it because it was playing in this zone. And I figured that, hey, price can go a little bit higher, a little bit lower in this zone. I didn't like it. Price came all the way down and continued with the Asia market trend of pushing down. And then we started to see London, this is at 6 a.m. Once again, 6 a.m. New York time. It didn't quite correct in London, but in New York, it pushed up before London market, before New York market opened at 6 a.m. It pushed up, which showed signs of rejecting not one zone, but 2 zones, gave an engulfing, and that would have been a great opportunity for entry. And I know I traded that. Right? If you take a look at, here's another one. Price opened up. Here's midnight. It didn't correct. London didn't correct it. London did not correct it. Look, at 4 o'clock, London, pre-New York, New York started to correct it and now created the Asia market as a wick. And then we had body from this point over, right? I can sum candlesticks, so I can see it easily, but I want to draw it out for you. This would have looked like from, this was open to here. So from the low to here, right, would have been wick. I'm sorry, from here to here would have been wick. And then when this candle closed, at just an hour before London, it started to give you a bullish print. It started to give you a bullish candle from here to here. So a correct Asia market was then the wick, and it started to show signs of correcting Asia markets manipulation. I get the engulfing, you wait a little bit longer, you get the engulfing, and here is still a good entry. Right up in here. And this is on the 1 hour, but I'm sure there were signs on the 15-minute and the 5-minute. I'm looking for engulfings on the 5 and the 15. So this is a different approach than what a lot of you learned in regards to if the daily broke a level of resistance, and that resistance is now support, and your candle is bullish, that you should expect that tomorrow we're going to be bullish. But for you to, that's great, but how do you time your entry? What are you looking for? I'm looking for getting in at the wick. I'm looking for getting in after Asia market is corrected. Does that make sense, everyone? I know that's a big concept there, but I'm using Asia market to help me with my entry. I don't trade Asia market. Why? No one trades Asia. Who trades Asia market with indices? Who does that? We don't do it because there's not a lot of volume. We don't do it because since there's not a lot of volume, you're going to have price push up. It's going to push down. It's going to be wide moves because there's no volume. It's going to impact price. You're going to get knocked out. No one trades Asia market. It's a manipulated market. That's when the big money can, move price around here and there, gather up positions, continue to push it in a direction, slowly trickle it all through the day, all through that market, and then turn around. That's their business. And that's why I go with the fact of, I go in with the mindset that there are traps everywhere. They're trying to trap us. It's just because price is running, do we really think, oh, this is great, price is running? They're just giving the money away. They're giving us the money. We could just hop in. I never go in the market with that mentality. I look at it as, is this a trap? And we'll study traps at another day, on another date. But I'm trying to give you my workflow on how I make entry. Step 1, chart weekly and daily levels. Charting the weekly and the daily levels in the previous day's open, high, low, close. Right, so weeklies are going to be charted as weekly open, high, low, close per candle. So you get a few zones above you and below you, so you know where you're going and where you may have resistance or price may react. Then drop to the daily. I'm marking out my swing highs and lows on the daily. Forget the H4s and the H1s. Forget it. Then I set my alerts to those levels, all of those levels that I drew out. I set my alerts. I want to be notified when price enters areas of my interest. I want to know that the lobster is moving close to my trap. Oh, there's a lobster in my trap. I want to know that, right? Oh, those of you that fish, you have fish finders, and it's like, shit, isn't it great to know when the fish is getting close to being close to under your boat and you're dropping your hook? I want to know that. Then I'm looking for the engulfings. I ignore, let's back up. When I get my alert, I ignore Asia market. I don't care if price returns to my level on Asia market. I don't care. I'm not trading it. I'm then looking for, is Asia market, since prices return to my level, is Asia market being corrected and creating the daily wick? Because the objective is to trade the day. We want to catch the daily trend, the full daily trend. So we know that the structure of a daily candle is a body, and there should be a wick on the top and a wick on the bottom. And we know that Asia market, since we don't trade it, that's the beginning of the day, that it may be corrected because we are concluding that it's manipulated, and therefore that's going to be the market that's going to create the wick. Once I see engulfings and I see that Asia is corrected is when I'm then feeling confident that I found the direction of which way the day is going to go. And then I look for entry. There are time frames you need to be careful of in the day. Okay, and I'll tell you, and because keep in mind, although these are showing up on close to New York session, sometimes I've gotten into trades at 2 a.m. because London has already corrected the Asia market and is already creating and forming that wick. So the times that I need to focus on are you're trying to find that coordinate or that cross between your weekly levels that you've identified and time. You're trying to cross that. The areas that you need to be concerned with are going to be, of course, London market open, the new 4-hour candle during the London market open, my 2 a.m. Sometimes anywhere between 4 and 5, because even though London is pushing in a direction, New York can correct it. And usually I find that if London did not correct Asia market and create that wick, and London is running in the direction of Asia market, there are times around 4 or 5, London or Asia market, London market will begin to slow down, and the New York market will correct it. And then, of course, New York market. And then the New York market open. And in New York market open, you guys always hear me talking about the lunch session, right? That is going to be, if we know that we're in a full bullish trend, that's going to be the moment where you're going to get those retests. That 1 hour from 9 Pacific to 10, which is really Eastern time, 11 to 12, 9, 10, 11, 12 to 1, you can get that full correction. Sometimes that could be a full day correction, and then it'll correct again. So you've got to watch out for those times. Those are going to be the things that are going to knock you out of the trade, and you're not going to be able to ride the full day. And that's when you're having to close out your position early, only to try to find another entry to continue your day because you feel, hey, the day is going bullish and I'm trying to re-enter. And then you're always in that scalp mode. You're always in that scalp mode because price can come down. So the best way to do this is to get in after the wick is being created. And usually that's going to be when Asia market is going to be the opposite direction of Asia market. And that's going to be somewhere in London or close to New York. And it's going to then create the wick of the day. And then that's when you know you should be safe, and your decision on which way the day is going should be solid. So there you go. Yep, Christian and Rosalind. Yep, evenings are better. Great. And then this is genius, and they all make sense. It's a simple way to evaluate the market. Exactly. It's a simple way to evaluate the market. I found personally, for those that may have learned and taken courses on this, when I was studying it, those principles are great, but in practice, you're stumbling. I know this because when I want to apply exactly what I've learned, you're stumbling with your entry. I don't believe that people are not struggling with their entry with what they learned on how to trade these high levels. And if you are good with that and you're able to ride that day without scalping it, please raise your hand now and tell me that. I want to know. But I don't believe that's the case. I'm going with I'm going with that because I'm a trader. I know what to look for. I mean, I'm good at the scalping. I can easily trade any other strategy as long as it makes sense to me. I had to tweak that majorly. Okay, and this is how I identify it. Me looking at the Asian market allows me to not necessarily focus on that rule that, hey, if you break structure and you close bullish, you should continue to go bullish. Because we've seen many days where price breaks structure and it's only a break and retest or a break and rejection. It's rejecting that level. We see that all the time. A day can break a structure, and if it closes above that resistance, which is now support, and you're thinking and you go with the idea that price can continue up, well, and you're going to go bullish. But what about the wick of the day? If you don't time that properly, yeah, it's still going to go bullish, but you've been knocked out because you got in at the wrong time. You're not considering the wick of the day. Or the day is just going to be bearish because it turns around because it's rejecting the level. So use the Asian market and the understanding that the Asian market is a manipulated market to your advantage. We don't trade it. Don't trade it. It's not going to get you any good money. You're going to be up all day in front of those charts. Use it to your advantage and understand that it's going to be manipulated. It's the new day. It has to create a wick. It's going to be a part of the wick. Asian market will be a part of the wick. Unless, excuse me, unless the day is closing out as a doji. You know, you're going to have a daily doji, and then that means price pushed up, price pushed all the way down, price came back to the middle and closed out. You know, but you would have traded for at least half that day to get to that doji's high or that doji's low. So that's how I enter my day. I think we need to study more on entries and see it with more, more often, so that you can really get the hang of it. But that's really how I trade it. I'm looking, once again, my framework is chart, weekly, dailies, as I explained it. Ignore Asia market. Get alerts and get notifications when price returns to any area of my interest that's outside of Asian market. Then wait and see, is Asian market corrected? Because that's the wick that I'm looking to get, because this does not apply to scalping, everyone. This applies to day trading. Day trading is let's think about this. The objective of what we wanted to do was we wanted to hold a trade for the duration of the day, for the move of the day, right? With that objective, well, then we need to identify the best time to get in. And the best time may not be at 6:30 or 6:45 or 7. The best time may be when Asia market is corrected and we know that the wick is now made for the day. And now we can trade and ride the full body and even the other end of the wick. We can ride that to our advantage. Andrew writes, I know you did this with the move Friday. Are you using our marked levels as partials or playing it by ear? Using our mark? No, I will use those as partials. It depends. I will use those as partials. So, and correct me if I'm wrong, Andrew. So if price is moving up and it touches my level, am I partialing? Yes. Sometimes I'm closing it completely. If it's a move like this, where I've got 200 pips and I've moved 200 pips, I'm closing it. I'm closing it. I'm closing it.
Okay.
Yeah. I'm using those as partials. I'm closing it. So Friday when I called it, although I called a 65 pip move, for those that got in and may have not timed it well and gotten in, I said, hey, we're at 20 pips. For those that are scalping, for the scalpers, take a partial protect. Take a partial protect. But for those that weren't, you can ride that all the way up. I look for re-entries. This is what, take a look at this here. Look at this pattern here. Look at this here, right? Look at this hourly pattern here, right? If I got into this trade at this level and price is moving up and I'm starting to see this reversal, if it's not a significant level, right? Because we're marking significant levels. If it's not a significant level, I don't necessarily believe that this price is going to reverse on me. I just believe that this is just going to be noise in the market. And keep in mind, our scalping strategy was I'm pretty sure if I were to line this up, I'm pretty sure there's going to be a freaking moving average there. I don't know which one, but I'm sure there's going to be some sort of moving average somewhere here. Right? And what we would do is we would protect and we would do all those things. I'm not protecting. What I'm practicing more is when I see this, a opposite candle that is not in the direction of my daily trend, the day's got to match up, right? We're going to make sure that the day has got to be printed in the same way also. That's key, right? That's why I keep that up there. I will buy in again. A half a position of whatever I'm running, I will buy in again. Because I know that price has got to get to this level. It's going to go there. These levels become magnets. It's going to go there.
When you
Oh.
take your partials, do you protect at that point? Because normally I do, but
Yeah. Sometimes what I'll correct. Sometimes what I'll do is I will either protect or I will move. I'll protect it at break even, or I'll protect it at the amount of my partial. So it's still a break even, right? Because if I move, you can move your price to, let me retract that. My first thing when I said it was break even, you're at break even. If you were at break even with full position, right? That means that if price came back down, you really broke even with zero profit, right? But if you moved up and you took a TP, right? Which means you took 50%. I say you made $500. You know, the full move is 1,000. You made 500, and you moved your price here, and price came down to here. To me, that's not break even. To me, that is price was moved to entry. I'm sorry, a stop loss to entry, because you profited $500 at the end of this, right?
right.
Right.
Yeah.
So, right. Sometimes, depending on the move, if I feel like I need more bandwidth in play, I will move my stop down here, which will be equivalent to my $500 that I've pocketed.
Okay.
So that's a true break even. Right. So if I'm in this area here and price is doing this, I'm afraid that I may get hit. Say I got in here at this level, I may do a TP. I may move my stop loss down here so that it just gives me more room for it to move. And if it touches me, I'm at a true break even. And I'll do that when I see a major move in front of me. I really want to catch that major move, and I really want to get in the money with full position or something very close to it. Right? If the move were close and tight, then I'm going to TP and I'm going to move my stops to open price, so that if price comes down and touches my stop loss, at least I made what I partialed. But in a move like this, where if I know that the day is going in this direction, I'm gonna try to take a partial, give it some room so I can break even. I'll do break even moves until I'll even move stops if I know that it's very volatile in this area and I get in. You guys have seen my strategy when I scalp. I'll move stops up before even taking a partial. It'll knock me out. I'm not out the game. I'm feeling it. I know that price is going to move up, and I will get in again. I will find another opportunity. If I get engulfings, I'll find another opportunity to get in again, move my stops to break even, and then next you know, price starts to jolt and push in, and I'm the plane has taken off. So to answer your question, it really depends. Usually, what you'll see mostly in the market is that people are going to take a partial, move their stops to open, and they call that break even, right? Because your partial will break even. The remaining
position. I mean, and that's what I do. I mean,
yeah.
That's what I would call it, break even. But yeah, you're right. We did take profits.
Yeah, exactly. So so your partial at break even, move your partial break even. That's the standard practice, and there's nothing wrong with that. But that's something that you're going to have to make a decision on with, when you're in the market, when depending on what the market's doing. And this is all about, I don't want to go too heavy in the psychology, but this is all about the ability to follow your framework and also be flexible at the same time, right? You want to follow your framework to the T, but you also have to be able to compromise sometimes. And that's all that what we just discussed is like the compromise, what we do to compromise the things that are variable that we need to adjust to based on market conditions at that time. Does everything that I explained make sense to everyone? Are there any other questions or concerns around the Asia market? Is it confusing? Is something that you need to see more? Is that, let me know. I really would love that engagement so that we can continue to develop this skill.
Yeah, this makes a lot of sense to me. It's just this is a recording that I'll want to watch probably several times. Right. And then if we can keep revisiting the same concepts in future Zooms, that'll just reinforce it. So it'll be a little bit easier to catch on to and practice.
Perfect. Excellent. So that's exactly what we'll do. We'll continue that. Like this one here, I'm just studying here. So this one here, price came up. This was it shot up to my level, came down. Asian market, I don't care. Asian market has shot all the way up. It's 2 a.m. That new 4-hour candle for me, right at this level, is just to correct. It's rejecting 2 levels. This would have been a crazy major move for a entry during London market, all the way down to London and New York. Yeah, so this is the correction of the Asian market, creating the beginning to create a wick, beginning to create it. Actually did, because it moved high here. So this is the body came down, started to create the wick. So the wick was from this level here, from here to here, and then this was nothing but body, all body. So that's the way I play it. And that's really it. I don't want to make it so simple and say, hey, that's really it, because when you're in the game, you know, this is the concept of it, but when you're in it and you're having to pull that trigger, I know it gets difficult. I know it gets a little interesting on what you're doing and when you're doing it. But I would look at this, and for those that, you know, that have learned a different way, if that is working for you, great. If that really, you know, drills into your mind, then great. If you're having difficulty with the entries, I would say follow this, learn to kind of like merge the two a bit. The principles are the same. It's just, I'm not always looking at what the previous day is, because I understand that I can't predict today based on yesterday's candle. So if I can close my prediction, if I can minimize the window of my prediction, that will help me, and that's going to be Asian market. You can get confident, say the daily candle closed bullish, right? And Asian market pushed bearish and then corrected in London. I'm feeling good about that. Yesterday was positive, a great day. It was a bullish day, it broke structure, and we've created a bearish wick through Asia market, and now it's going to push back up. I'm feeling good about that. You can apply that principle, right? So even, you know, if you wanted to merge that with what you've learned, that, hey, if yesterday was bullish, broke structure, and we should expect a new bullish, then you got to say, okay, but how do I enter? You need to ask your, you know, whoever you learned from, well, how do you enter? Show me some entries. Show me that. Show it. You need to see it, right? How do you know how to enter if you're not being told how to enter? Because it's not just as simple as engulfing candles and you enter, because you aren't told. I don't believe you were told to what hour of the day, or if it's just London market, or I'm sorry, just New York market or not. This strategy I'm teaching you, if you trade just London market, you can play this. If you trade just New York market, you can play this. It's giving you, you know, the true strategy on the actual entry. That's when you have to get granular, very, very detailed and granular. It can't just be a concept. You have to really dig deep and zoom in, and that's where you're zooming in. You're zooming at the 5 minute and the 15. I'm not, and for clarity for everyone, when I'm looking at my charts, I'm never looking at the 5 minute until I need to. I'm really running usually on the 1 hour. Okay, I'm just sitting on the 1 hour. If I want to just peek in and look at the charts, I'm looking at the 1 hour. I don't care until I get my alerts. My alerts are ringing. Once I get my alerts ringing is when I'm going to zoom down. I'm going to start to zoom down on the 15. And I'm looking at the 15. That's my second, with this strategy of day trading, that's my second favorite time frame, just to look and see what's happening in a 15-minute interval. Can I get some engulfings printed on the 15? No, I'm not getting it. Now let me drill down to the 5. Oh, I see I've got 2 or 3 on the 5. Okay, that's great. If that manifests to a engulfing on the 15, and I've got 2 on the 15 and on the 5, and everything else we discussed lined up, I'm taking that entry. I'm taking that entry. I'm actually taking it. So there you have it. I will leave this segment open right now for questions. I'm pretty much done with what I showed you. And what I want to do is, we've covered a lot of different bullet points. I'm going to break them up. In every session, we're going to drill into a segment of what I discussed, every segment of it. You know, this year, I want to make sure that you guys are getting this bag. Like I said, when I was in South Africa, I'm literally in an Uber I'm getting my alerts and I'm switching over to TradingView on my phone, and then switching back, getting my alerts, followed my framework, and I entered the market and I left the market. And I only entered the market when I was supposed to, according to my rules. And I love that, because if I'm sitting in front of my chart, your mind is going to play tricks on you. Your mind is going to start to see things. Your mind is too idle in front of your chart, and you're going to want to do something, and you're going to create a trade, and you're going to force a trade. I love the idea. If I'm in the scalping mode, I want to be in front of the market. I'll do that. If I miss my move, this is what I do. I don't want you to do this. Please, not yet, because I want you to be able to differentiate the two strategies. If I miss my move or the creation of the wick in my entry, then I'm in scalp mode. And I'm going to get the bag regardless. Then I'm going to go into the market with the scalp mode, 6:30, the bell rings, and I'm going to scalp it. But I didn't scalp. And when I am scalping, I'm only scalping at my levels, at my weekly levels, at my daily levels. That's it. I'm not even scalping at the 30-minute zones looking at a 5-minute chart, 30-minute zones. I'm not doing any of that, right? I'm only scalping. I will drop down to say a 5-minute, and I'm only scalping these moves. But it's the same entries, except not considering the wick. It's the same entries at the same levels, and I'm only scalping it, or I'll say scalping, because I know since I didn't get the ideal entry for the day, I've got to be on it, because price can come down, knock me out, and continue. So that's going to be, even with these levels, that's going to be, you can still fall into a scalping mentality and day, and that's what we want to avoid, right? We want to avoid that, because you didn't get in at the most ideal time and at the most ideal level. And that's going to force you to have to scalp, because you're going to get in at a level where price can easily come and retest. But I know, if we know that Asian market is manipulated and it's creating a wick, and even, London's following that, and then say New York, it retests it. It resets it. Since they've already, think about this, their job is to take our money daily. So where do they take the money? The people that are in the wick, the people that are sitting in that wick are screwed. They're not going to return price down to that level. They're not going to return price down to that level. They're going to squeeze play these guys and make them close their positions in the negative. They're going to make them close their positions in the negative. So if you could get in at the beginning of that body, chances are they're not going to push back down to that wick, because they've trapped them already. They're already trapped for the day. And the momentum of everyone getting in, and then the momentum of those people in the wick having to close their positions, is just creating a push. It's creating a movement for the day. Any questions, anyone? If you've got any questions, please feel free to ask. We can talk about it for sure. And then what we'll do is we'll begin to wrap up, because I will have to, get on this flight to New York.
Everything seems like it makes sense to me. I mean, obviously it's practicing. It's different than like seeing it on, somebody else's screen. Are you going to do more of those signals? Because that was pretty awesome. I'm not gonna lie.
Yeah, exactly. I'm definitely going to do more of the signals. I've always said, I don't want to give signals, because I don't want people to, just rely on signals. I want you to actually learn. But I think if we can keep this up, where we're in the classroom, learning this strategy, jumping back down to real life trading and spelling this out and dropping these signals, or just trading it, and you guys are seeing this from time and time again, what we're learning here, then dropping the signals are going to make sense. And I know that you're getting the advantage of what you're learning, then seeing it in real time in a real live market, and then you're seeing that the signals line up. I don't think there's any harm in that, but I just don't want to be, I would never want to become like a signal service. So as long as we're learning and we're doing this, I'll continue to drop the trades that I'm making. And I even make the EA auto trade that. I'll auto drop the signal. So if I make an entry, you're going to know I made an entry. And it's going to give you, what I have as my stops.
Oh, that's cool.
So it'll do that automatically.
The other thing is, like, because I guess in past I would get the alert that we were in a daily or weekly level.
Yeah.
And I was never sure which side to take, because it's like you see price at the 11,416 level. It respects it, but it never really goes to that higher level for a while. Like if you go back towards the 2100 hour kind of time frame, it just keeps bouncing, but it doesn't really make the move that you're trying to make.
That's right.
And scalping, that would have been fine.
Yes.
But you know, and then it totally disrespects it, goes down to that other level, and that's where it ricochets.
Exactly.
But you know, before I would get caught because I'd be trying to get the reverse, and then all of a sudden it didn't respect it, went down to the other level. I'd be closing out, and then you know, it goes up.
Yeah.
How do you identify basically that we shouldn't respect, like in this case, that 416 level until it basically breaks through and then goes? Because it does give some bullish, you know, engulfings, and then obviously it gives some bearish ones as well.
Yeah, so here for this one here, this 416 on the 5-minute, it gave us these two bullish engulfings.
Mm-hmm.
But you know, it gave me the bullish engulfings, excuse me, but I noticed that price, you would think if it's giving you engulfings, that price would show signs of pushing up. The price still wasn't pushing up, right? Price was still dropping from this bullish engulfing to this bullish engulfing, price was dropping. It was still below my level. I don't need to create the entry right after the bullish engulfing. That's just another confluence to me that, okay, it's really about to happen. It could really happen. And it doesn't mean that I'm making the entry at the close of the or the open of the candle right after the engulfing. I still look because I need to see some bouncing. I need to see that price is moving up. Here we got the engulfing. Here we got another engulfing. This is not a good entry, even though we got these two engulfings. Where are we seeing price moving forward? Here now we're seeing price move forward, right? And I may not even get in at this candle. I may even wait for another candle to see more momentum moving. So a sign for me is that even though we're getting the confluences, we need to see the proof, right? The confluences should be an indication that things are lining up and moving in your direction. If we're getting bullish engulfing, we need to see price moving bullish. And if it's not, we may be looking at the move too early. It's okay to be patient. It's okay to be patient. We may be looking at the move too early. Price could have continued to push up and given us some movement, but until then, there's no need for us to be hasty and make that entry quickly. And that's really the practice that I do. And that's something that I think with the experience of you seeing it over and over again, of you identifying when it's going to be a fake out, or not even, this wasn't even a fake out, it's just consolidated and dropped, when you should take the entry for the reversal or take the entry for the continuation. And there was no sign for me to take the entry for the continuation, and there was no sign for me to take the entry for the reversal. If I'm relying on engulfing candles, there was no sign, right? Although we got these two engulfings, it wasn't pushing up. Price still was not pushing up. It did not push up. Like I would, if this is engulfing and then I get another engulfing, I would at least want to see that price is breaking the high, at least between the two engulfings or something. It didn't do that. It just never did. And therefore, I'm not making that entry. Because keep in mind, these moves, unlike scalping where you've got to really be precise and get your entries quick, because these moves are larger moves, you know, so this is 65 pips, but because these moves are larger moves, you don't necessarily have to get in at the very, very bottom, right? You can get in if price moves even up to this level. You can get in there at that point. Still, for me, it's above my level. This is what I identified as my level. And I'll be looking even this high up. Sometimes I'll get in even this high. You know, if I missed this entry and I missed it for some reason, and I'm looking and I'm seeing, man, you know, price is moving up. It is rejecting I am in the body of the day now, and I see that the wick has been reversed. I'll still get in if I have to. I will still get in even at this level. You may think that, you know, that's high. You may have to adjust your lot size, but I would still get in. So my advice to you is just be patient. Just because you see the engulfings doesn't mean that it's going to go in that direction. See that if you're getting engulfings bullish, see that price is moving in that direction. If you're getting bearish, see engulfings and it's a bearish move, see that price is moving in that direction. If price broke this level, this 416 level, came up and was giving me bearish engulfings as it rejected this level, that would have given me the confirmations and the confidence that it's still a bearish move, and I would have made entry. But it didn't give me that. It did not give me that. So my advice, Brad, is to just be a little bit more patient in your entry, because the moves that we're trying to make, they're not going to be 10, 15, 20 pip moves for a scalp where you gotta, come up really quick with your decision. These are going to be 100 pip moves. And if you give up 80 of those pips, so what? If you caught 40 or 50 of that 100 pip move, so what? That's fine. And you wait for yourself to be able to visually see that price is moving in that direction. And keep in mind here, let's see here, let me just look at this day. Keep in mind here, at this point, the day was bearish, right? Price is moving down, the day was bearish. If you looked at the candle here, this was a bearish candle at this point, right? So you've got to be really, really careful, because then you're trying to counter trend it. You're trying to counter trend it. Look at this entry here. At this point for this day, no, this was still bearish. This was still bearish for me when I made this move, because it broke my levels. It never touched the top level. It broke all of these levels. It went down 2 levels, and I saw that it was really consolidating. And at least I saw that price was holding. It wasn't dropping on these engulfings. And here, what price is this? Let me just move this. Okay, this was already above my entry, but I was saying I need to see price at 340. I think it was a 344, one of the two, because I saw that the price was not below my level. Like this is below the level. This was resistance. This here was still support for this level. This was, we're trying to buy resistance, right? You really want to buy support, right? Not resistance. So for me, this just didn't feel good. I did not make this entry. Here, this was still support. It wasn't as if price was still pushing down significantly. And I was making sure that price was going to, break at least 340 or 344. And that's when I started to feel confident. And when I saw this here, these engulfings, I felt good for the day, that I was able to, there was going to be a nice, good, I picked the right direction for the day. So just be a little bit more patient, I think, with your entries when it's touching those levels. I hope that helps you.
No, it does.
And that's pretty much it. I won't be, unfortunately, I will not be on tomorrow morning, because my flight lands somewhere around 7:30 or 8:30. So I won't be on, but tomorrow's a holiday anyway, so I'm not expecting anything crazy at all, like zero. So I probably will not be looking for anything until Tuesday morning, just so that everyone's aware. And there you have it. So my suggestion, chart, go back, drop this to the hourly, right? And go back and look at, to study your entries, look at the days where, the wick is made. And that's going to be anywhere between Asia market and somewhere between London and New York, and see that the correction of the Asia market is made. Those are going to be where you're going to be finding opportunities for entry. And if it doesn't do that, if it doesn't fit your rules, you don't trade it. Simple as that. Who cares? You do not trade it. And it's okay. There's so many, and don't think, hey, because these are weekly and daily levels, that, man, I'll be waiting for so long before my next trade. You really won't, because you're going to have a trade. It's going to be touching your levels at these levels at least twice in the same day. I've noticed that, it's touching levels, it's touching either the same level or multiple levels a few times in the day. And then you can find your entries. So you'll still have more than enough. These are just significant levels. So don't be concerned that you're going to be sitting idle for days. You're not. You're going to have multiple moves every single day. Either you're going to get the entry and you're going to ride that out and manage that trade, or you're going to get in a little bit later at those levels, and at least you'll get some pips for a scalp. And a scalp should be, 20 to 50 pips. But you're going to just need to be on alert and aware so that if price does turn on you quickly, you can protect and close and take partials and such. So I hope that was very, very helpful for everyone. I'm going to record this. I'll drop this. I'll chop this up probably tomorrow afternoon sometime. And I'll share this in the community so that you guys can watch this over and over again. And we will then, gather your questions and share them in the group. Because everyone should have this knowledge. It's not just, a certain segment of people. Everyone should have this knowledge. You can drop your questions in the group. We'll address it there. We'll address it here on our lives, and we'll keep it moving. I would expect that I will pick another night this week, probably Thursday, because then Thursday I'm in Virginia. Thursday evening, I may have time to do this. I will find out the proper time this week for us to get on again to cover this, to cover the LB, because I want to line this up. My LB is on the other computer, but all of these entries that we're talking about lined up with the LB, right? So if you still need an additional confluence, go and look at that LB. You can look for the LB as well. And there you have it. Thank you all for joining. I really appreciated, going through this with everyone. I hope you guys found value through this teaching lesson. I'm hoping that you will be able to profit from it. I'm going to be dropping my trades. You're going to see my trades. It's all going to be within this framework. So it should all start to make sense to you as we start to go over it over and over and over and over again.
I really appreciate you doing this, man.
Thank you much. I appreciate that as well. And let's get the bag. Let's get it. And, questions. Please ask, please drop them. That's what we need to see. We need to see those questions, because if you're not asking questions, I think you have it, right? And then that could be misleading me. So I don't want to mislead you. So please just be, real with me. Let me know I'm just not getting it, and I'll get on a one-on-one. I had a one-on-one with someone on Friday. I will get on a one-on-one with you. That's not a problem. That's not a problem. So thank you much. Everyone have a good evening. Have a good night. And I will catch you guys tomorrow sometime.
See you, man.
Have a good one. Bye-bye.